Hi, everyone. Welcome to Reimagine 2020. I'm one of your hosts, Artur. Today, I have with me Bill Barhydt, founder and CEO of Abra, one of the early crypto wallet apps. Welcome, Bill.
Thanks for having me.
So, Bill, you've definitely been in this space longer than a lot of people sort of very active today. Why don't we just how did you first how were you first introduced to crypto, and what were your kind of like initial, what was that time like in crypto?
Sure. So it's been a long road for me. I mean, I worked in cryptography, go back over 30 years ago, right, for the government, and worked in capital markets and early internet.com 1.0, working on payment and SSL, a lot of the early technologies. So it's been kind of a gradual, I've kind of gotten along with the internet towards crypto. And, crypto is kind of a culmination of a lot of different things happening at the same time. It seems like the time was finally right for a lot of different reasons. And so, I was part of the early cypherpunk movement. We always talked about, wouldn't it be great if there was money and a protocol for money for the internet? It was actually baked into HTTP protocol, right? You may remember that there's certain error messages regarding money. So cypherpunks have always been thinking about this. I read the white paper for Bitcoin itself a few months after it was published. And my first reaction was, wow, if he really solved, or she really solved, this double spend problem, that's interesting. But when I read it, I didn't really quite grasp how they were going about solving it, because it sounded like they basically wanted to use every computer in the world to solve the problem. And I said, well, that doesn't seem practical. So I kind of put it aside a little bit, and ultimately realized, probably like a year later, so this is probably like 18 months after it was created, if you're really thinking about internet scale decentralization, then using a kind of a BitTorrent-like model to solve the double spend problem may not be such a bad idea. I mean, BitTorrent's scaling pretty well. The music industry has been unable to shut them down. and so if you can do that for money and not have an off switch, maybe that is the way to deal with the decentralization idea. And maybe that was a super clever approach. And it turned out not only was it super clever, it was kind of world changing. This idea that it would take every computer in the world to solve that double spend problem, and at the same time you could create a new deflationary asset, was just, once I had that aha moment, it was just mind blowing. And that probably happened for me, I would say in late 2010, maybe early 2011, and then I did a TED Talk, which is somewhat infamous now, in 2012, kind of in the early days of Silk Road. Or kind of a midstream Silk Road, I guess you would say. And, people were still trying to get their arms around it, except for people who needed it. They got it right away, unfortunately, for better or worse, however you want to put it. I guess if we didn't have those people in the early days, whether we like it or not, I don't think we would have what we have now. And so maybe in some ways we owe a lot of those pioneers a debt of gratitude, even if the governments don't necessarily agree with us. Anyway, so yeah, it's been a long road to get here, but I'm super excited and honored to even be able to work in something that I think is finally going to change banking and money. And, we've changed everything else from the inside out via the internet and software, except for money and banking, right? And this is it. I think this is really it.
Absolutely, I completely agree, and I guess like you've truly sort of like seen it go from zero to, I'm not sure what number do you think we are at right now, but
yeah, I think we're in one. You're probably used to the American analogy of baseball, and I think we're in that proverbial first inning. It's basically hackers, computer science types, libertarians that are interested. We're just now starting to see institutional investors. We're starting to see technologists beyond the people who are interested in kind of that libertarian perspective show strong interest. Non-cypherpunks. And that's what happened with the internet itself. There's going to be a whole new banking stack that's decentralized. We're starting to see some of it now with the DeFi movement, but it's barely started. So what I'm saying is we need a whole new banking stack to be created. And we're so early in that process, right? DeFi and the DeFi movement is showing us glimpses of what that could be. It's very early, it's beta stuff in a lot of cases, there's been hacks, whatever, but we need that to happen, and we're super early. We need people who aren't necessarily cypherpunks to join the party, right? In software development, in legal, and business. We need people who know how to run a business, and everything else that goes into that, to be interested in this. And then what I think happens is the existing banking world over the next 10 to 15 years goes bye-bye. And all of a sudden we end up with this crypto-centric model that has all kinds of benefits in terms of globalization and making money available and lending and a whole bunch of other things that traditional banks struggle with. And so, long answer to your question, but we're super early, but it's a great time to get on board.
So a lot of points I kind of want to address there, but one question which I've wondered myself as well. Do you think so? Obviously, there's no doubt that we're going to have this, that crypto is disruptive. But do you think this sort of like the adoption of crypto or the market share, is it going to come from essentially the new economy that is being kind of the new decentralized economy that's being built, or do you really think that kind of that it's going to consume sort of the existing banking sector kind of? Because I guess like there was sort of like Amazon didn't disrupt the bookstores, right. It created like a bigger economy and the internet, right?
Absolutely. But okay, so I think that's a great analogy. So look at it both ways. First, you're going to solve problems that traditional banking and money doesn't solve very well or at all. Then it's going to eat the whole thing. That's what happened with the internet, right? So Amazon was really good for people who needed stuff that was hard to get, couldn't leave the office, didn't have a bookstore nearby. All of a sudden, they ate shopping and they consumed shopping all of a sudden, but it took 20 years, right? So I think that's what's going to happen here with banking, is that in the first phase, you're going to see lots of transaction types, maybe cross-border lending or digital gold in the case of Bitcoin, certain applications of DeFi. And then there's nefarious things, whether it be like the Silk Roadish type of applications that you can't solve via traditional banking. Maybe it's the stuff that PayPal won't support, certain high-risk applications. I wouldn't be surprised if the cannabis industry, reap the benefits of this world, for example. But eventually it's going to swallow all of it because it offers so many benefits. And the existing banking system is broken in so many ways. It's so unnecessarily complicated. There's so many, can't fail monoliths that the government has to bail out. And of course, then there's the idea that the government can just print money at will, which is now, I think, entering its last phase. So while crypto is entering phase 0 to 1, the ability to print money at will is entering like phase 8 to 9, right? It's what Ray Dalio refers to being late in that debt cycle, which leads to a lot of these movements like we see with Trump and a lot of, populist movements. Populism is very predictable when you're this late in the debt cycle. And a deflationary asset is a great response. And decentralization is a great response. So it all seems to be coming together at the right time for this flippening between decentralization and centralization.
Right. And so would you say then that, I mean, I'm a massive fan of Ray Dalio as well. Would you say that after Paul Tudor Jones, Ray Dalio is going to be the next Bitcoin evangelist? Or
I hope so. I mean, that would be huge because he's such a public pundit right now that having him on board, and look, given how on board he is with gold, I wouldn't be surprised if he gets it in very short order. So, we'll see, but it's early. I think his comments and his strong beliefs around gold translate really well. Matter of time.
Absolutely, and I think like from it is a slightly generational difference sort of thing as well. That I think for especially when it comes to the younger generation, Bitcoin actually makes more sense than gold. Kind of, it's a bit more intuitive than gold.
Absolutely.
It's not like these people are there. They don't make up a majority of the economy yet, but no one can argue that share of people is only going to be growing, right?
I don't have to have long conversations explaining the virtues of Bitcoin to 25-year-olds. I have to have long conversations explaining the virtues of Bitcoin to 65-year-olds. And so that's encouraging, right? But what's also encouraging is 65-year-olds are starting to pay attention and get it too. But if it's going to take 20 years, a lot of people who don't get it are simply going to fade out, like is the way of things, right? You know, we all die.
Yeah.
So it's always the next generation that's going to get it faster and better and add value, right? So we're in the middle of that sea shift now. It's going to take a couple of decades. In the meantime, we've got our new digital gold, like you said, and it's awesome. And so there's so many opportunities here to learn, to contribute. Yeah, people just need to start digging in a little bit. And then once you scratch the surface and you have your own aha moments, you kind of get sucked in to the vortex, you know?
But let's talk a little bit about that in terms of like kind of consumer behaviors and what you have seen. So Abra is it's a globally available, extremely popular wallet and a crypto purchase app, right? So you guys have been around for now over 5 years, right?
Yeah, we've been around publicly for about 3.5, but the company's existed for about 5.5. Yeah, we actually do 3 things today, and there's some more things coming. We're a crypto wallet where you can buy, sell, trade myriad cryptocurrencies, buy Bitcoin, Ethereum, Bitcoin Cash, XRP, Litecoin, and a whole bunch of, probably about 150 or so altcoins. And you can do that in almost every country in the world, minus, of course, the US sanctioned countries. We have a high yield product that allows you to earn interest on dollar deposits. You can earn 10% on dollars. You can earn interest on Bitcoin, Litecoin, I think Bitcoin Cash, XRP, and a couple others. And we run an institutional lending desk. That is what we use to generate the yield. And we have tens of millions of dollars in assets that are moving around, daily on that lending desk in order to be able to generate that yield. And we work with hedge funds, other, institutional clients, miners, different types of companies via that institutional side of our business. And we've got more consumer and more institutional products coming out very soon as well.
Wow, that's awesome. And what is your kind of as obviously as much as you're willing to share, but what is your kind of customer base look like, and how has it in terms of like demographically, and has there been kind of like a noticeable change over the years as well?
There has been. So our business is global, as I said, but we started out in the US, right? At the beginning, we didn't really market outside the US. And so, because you only really we didn't have crypto deposits when we first launched the app, it was only bank. And so at that point, it was just US. Now we have crypto deposits. We get way more people depositing crypto than we do cash. And when I say crypto, I also mean stable coins. So some people might get stable coins at an exchange and then deposit it in Abra, or somebody might give them stable coins, which they deposit in Abra, or just receive stable coins from a friend or whatever. So you can deposit via bank wire, you can deposit via stable coin, deposit other cryptocurrencies. That's opened up Abra to a global audience. And so because of the historical reasons, about half our user base is in the US, but the growth outside the US is faster. So they're both growing, but the outside of the US is kind of catching up and surpassing the US user base. And so there's lots of days now where we get lots more non-US users than we have US users. So the US GDP is very high, so we still get slightly more deposit volume from the US. We get a lot of users in Southeast Asia, for example, in your region. That's probably the second after the Americas. I would say Southeast Asia is number 2 for us. We get users from the Philippines, Thailand, Singapore, Vietnam, the whole region. But we also we run a cash network in the Philippines, which has really helped us a lot. There's thousands of retail locations, including 7-Elevens, where you can walk in with cash and leave the store, with that money in pesos on your phone, and then either send the money, or some people use it as a money transfer product, or just buy your crypto, or both. We have lots of, and now people use it as a bank account where they invest and store either the Bitcoin or the dollars and earn interest on the dollars, which they think is more valuable than the local currencies anyway. So the audience has become very global. And then Europe, can't leave Europe out. We get lots of users from the UK and Germany and other countries in Europe. So it's really become global. It's pretty cool. We don't do paid advertising today at all. Everything is organic. It's word of mouth. It's social media. And that's the beauty of this global crypto community, is that people love to talk about crypto. Are you into crypto? What's your take on it? Where do you think it's going? Is it a bunch of criminals? Just people love to talk about it. And so invariably that leads to word of mouth for what we're doing, for people who just want to get into it. It's because it's not an exchange. It's not really meant for high-end traders. It's really meant for everyone else. And because it's not an order book where you see like bid-ask spreads and stuff like that. And we use that stuff in the background to execute on your behalf. But the app is super simple. It's like
Mm-hmm.
It's basically looks like a Venmo or a, WeChat Pay and stuff like that.
Mm-hmm. That's great. I mean, great work so far. And what have so you guys been operating for quite a few years. What have the sort of what have some of like the learning points around like customer behavior or sort of customer like mentality or mindset been?
Yeah, a lot of education. We spend so much. We have basically become a media company in some ways, right? We produce a ton of content, right? I run a the team, we run a show every Friday morning called Money Talks, which is seen by thousands of people, probably tens of thousands now. We run a weekly news. Thank you. We run a weekly newsletter which goes out to hundreds of thousands. We produce blogs. We produce educational content, ebooks. It is the table stakes for us to educate people on what effectively is a new asset class, a new type of application, a new way of looking at banking, and all this, and to address all the scary features of that, right? What is a private key? What is this idea of losing my private key? How is that even possible? What does that mean? So the education process is never ending. There's always new stuff coming down the pipe. And we take it very seriously. We don't think that people are just going to go somewhere else, figure it all out, and then come back to us. We want to be the place where people can learn, figure out what they need to know, and then execute. And so to that end, we've literally had to become a small media company within Abra. We take it very seriously.
That's so cool. And does that mean that a lot of your kind of customer base are they like very, very first time crypto users, or which part of the sort of the educational journey do you usually kind of, do they find, when do they find you?
I would say 65% of our users, maybe anywhere, it depends, the country may vary, but 50 to 65% of our users have their first cryptocurrency experience with Abra, usually with Bitcoin. Some get interested in an altcoin project. We have big fans in a lot of different altcoin projects, but I would say that at least the simple majority have their first experience with crypto with Abra. Some use Abra and exchanges. So if they want to basically have a simple app that they can take with them, that they carry a whole bunch of their crypto, and as opposed to hardware wallets, they'll use Abra because they can quickly move between currencies, send to external wallets, send to friends, do a quick trade if they're on the go. Abra is great for that. I've actually talked to CEOs of exchanges who use Abra for that. I didn't know that. I had one, you know them. I think you're interviewing the person. I'm not going to embarrass them and say who it is. They use Abra in addition to their own exchange for this reason, because they say, look, I understand, Abra is not an order book, and maybe there's this spread's a little bit higher, but it's so convenient that if I just need something quickly, especially if it's, Bitcoin to an altcoin, or if I need to basically get a whole bunch of true USD or tether into my app from my bank account, Abra is by far the easiest way to do it. And so we're not trying to be the best exchange for the high-end trader. Tonebase hates Abra, I'm sure. I'm sure he looks at Abra and goes, get out of my face with this. He's not my target customer, right? So my target customer is everybody else, but there's a lot more of everybody else than there is of the high-end trader. And if we're going to build a crypto banking ecosystem, we have to start with the basics. And that's what Abra's done.
Absolutely, and I think like this is one thing which I personally sort of like love about crypto as well. Is like you mentioned that you haven't done any paid marketing. It's kind of, it really changes and like paid marketing in crypto, it's very it's a slightly different ball game, because like some things are like banned, other things are not possible, and so on. But like it really comes down to sort of this sort of like product based marketing that like you need to actually do the work, right? That you just can't sort of like buy yourself out of kind of like having no product market fit.
Yeah, I mean, look, we're too early for awareness marketing anyway. But there's no way that I'm going to run an ad on CNBC, have somebody look at that ad, and have crypto in their hands in an Abra app 10 minutes later. It's not going to happen. Someday it is going to happen at some point, not today. Okay, everybody who touches Abra had a whole bunch of and with money had a whole bunch of other touch points before that. And by the way, that's true of every crypto product. There's no crypto product that goes from, oh, I heard of it 10 minutes ago to money in my account in an hour. It doesn't happen. you have multiple touch points so that they get comfortable with you. They talk about with you with their friends. They go on Reddit. They go on Twitter. They go on Facebook. That's why the content marketing is so important, so that we can educate people and get over the fear. Hey, do I trust this company? Everybody associates crypto with scams, whether we like it or not. I don't like that. I wish it wasn't the case. We have to help people get over that hump by being out there. And not just Abra, but everybody in this space has an obligation to be out there and help the whole space move forward from a business perspective, because it's a case where there is a rising tide that's going to raise all boats here. When volatility goes up, when volumes go up, unless you're under a rock in the crypto space, you're benefiting from it. And it behooves all of us to do what we have to do to educate everyone the best way we know how.
I completely agree. And so one of the things you mentioned earlier that you recently launched the like a high yield savings account, or like the interest accounts. So this is one thing which sort of is starting to be talked about as that this might be the killer feature that really brings in a lot of new users into crypto, because we have zero, potentially negative interest rates.
That's right.
What has the take up been
been for
awesome. That? Has it been like a wow factor?
My God. So we generate the yield via our lending desk, and our lending desk is so busy because the inbound interest has been so high. The volume of deposits has also per person. The volume per person has been much higher than we anticipated. So we have more users depositing more money per person than we anticipated. It's very simple. People trust us because we've been around. And they look at the rates and they go, well, I'm not going to get this anywhere else. And there's no shenanigans with other tokens. It's just you deposit dollars, you get 10% more dollars. Excuse me, you deposit Bitcoin, you get 4.5 or 5%, whatever the current rate is, more Bitcoin. Full stop. My favorite time of the week is Monday morning. How many people have told you that? Monday morning. Why? 9 a.m. Monday morning, I get 5 text messages because I have 5 accounts that are Abra interest earning with push messages that show me the interest that I've earned this week. I get so excited when I get those text messages about all my interest. It's free money. I'm like, oh my God, here it comes. It's 9 o'clock. So, it's like turn Monday into, oh, it's Monday morning, to like, oh my God, it's Monday morning. So if you're not excited about Mondays, there's one easy answer. Put a whole bunch of money in Abra and wait. And then the next week you'll be excited. So there you go.
That's not a bad deal. And I guess like on the opposite end of the spectrum, like I was just speaking to my father, for example, who lives in Europe, and he said that he found a great deal that he gets 2% a year for a five-year term deposit. I was just listening, just like
that's a good CD rate.
You lock up your money for 5 years and you get 2% a year. That's
that's a certificate of deposit
this is kind of like what we're
in the United States.
With.
I mean, yeah. And by the way, I am convinced that we are, moving towards not hyperinflation in the US, because we've had it so bad with all these recessions, but you can't inflate your currency the way we have and not end up with price inflation. It's the math just doesn't work. I used to collect baseball cards. Sorry for those of you outside the US who think baseball is ridiculous, but there's a few famous baseball players whose baseball cards are worth a lot of money. And they're worth a lot of money for 2 reasons: because of the person whose likeness is on the card, and because of the fact that there's no longer a lot of them because they're really old, and the ones that were out there are gone. They disintegrated, nobody saved them, they're trash. If you take one that's really expensive or really valuable, like, I don't know if you've heard of these people like Babe Ruth or Mickey Mantle, right? New York players, I'm from New York. And you found out and those cards are really valuable, like thousands upon thousands of dollars, in some cases, hundreds of thousands. And all of a sudden you found out there were an extra 1,000 more of them than what you originally thought. You would be really upset as a collector because the value of what you just had would go to shit. That's what we're doing with money. But people think that it won't happen. But we just, keep cranking out more money in the sausage grinder, and out the other side comes more money. Oh, it's okay. It's, it's 20% more money. It's not going to be worth, it drives me nuts. People don't have realistic expectations about what that meat grinder is going to do, out the other end of the sausage factory. And there's going to be a lot of disappointed people, and that's really good news for our market. So, yeah.
Absolutely, and like I've noticed from like among my friends, like people who were not who were maybe like a little bit, defensive around crypto, have really started to kind of come around to it. That they're just like, that this what's going on in the global markets has just they're starting to get just like, pissed off, and they also agree that, okay, this does not make sense. Maybe this crypto thing that you guys are doing is maybe it actually kind of maybe there's something there,
Yeah, yeah.
But let's talk about another thing, which is so regulations in crypto. How do you sort of, what are your like thoughts on how that's going? Because like the
Okay,
way I
so
see it is that, sorry, go on. Yeah.
no, I was just say it's 6:30 at night here on a Monday, and you want to talk about regs, so I need to go get a drink and come back. No, it's all good. Look, it is so complex. I cut you off for you to ask the question, but let me just say, it's so complex. It's such a moving target. If you're in this space and you don't lawyer up, you're asking for trouble. Even media companies in crypto have to lawyer up because of solicitation rules and everything else. So especially if you don't come from capital markets and you don't understand the rules, you doubly need to lawyer up because you don't understand what everybody else who's coming into it from traditional markets already understands, whether it's securities regulations, commodities regulations. In a lot of countries, it's the same regulatory body. In the US, they're different regulatory bodies. E-money rules, like in places like Singapore and a lot of other countries, are one regulatory body. In the US, there are 52 regulatory bodies for what you call e-money regulation. That's insane. That's that's more than I have employees. So if you don't lawyer up in this space, and you have to understand a little bit of the basics. Now, I've been doing this way too long, so I know way too much for my own good. I wish I didn't. I just wish I could just give it to the lawyers and let them do it. Unfortunately, I always end up with an opinion, and I'm better off not having an opinion and letting the lawyers tell me what's right and just getting on with my day, which is what everybody else should be doing. Don't do it the way I do it. Do it the right way. So, but cryptocurrency is a job protection act for the legal industry. I don't know what else to say. That's what it is. And you've got people on the government side who are moving into private practice, and people in private practice moving into government side. It's this whole circular racket that they have going on, and more power to them. I think they should be able to eat too, but it's going to get harder and more complicated as we go on. Lawyer up, people. And if you're in DeFi and you think that what you're doing is not regulatable because it's all decentralized, get your head out of your ass and lawyer up, because you're going to be very disappointed very soon if you don't.
And I just feel that like the kind of like the direction of where like both sides, so let's say like the policy side and the industry side, it's essentially it's so clearly like on a collision course, because like neither side is that willing, or not even like really willing at all, to listen to the other side or to make like any compromises. And like there's only like one outcome out of it, right? So like, we have like stuff that like like the travel rule, which is just doesn't make sense, and sort of like just in the way that that like crypto works, right? So we're essentially, like the way I see it is like we're trying to apply these, or they are trying to apply these rules which haven't worked to combat money laundering in the traditional world, to now for them to mysteriously sort of kind of solve these issues which they haven't solved before in crypto,
right?
Yes.
I mean, look, AML is a red herring. It doesn't work. The banks, the governments are losing the battle. There's only so much money they can extract from banks in terms of expense ratios in order to combat money laundering. We need to just like we need to rethink the drug wars. We need to rethink tax policy at the global level. And it's not just about illicit funds. A lot of people just don't want to pay taxes. My take, everybody asks me their opinion when it comes to crypto and taxes. My first response, I don't care what the question is, my first response is always the same: pay your damn taxes. Crypto is not a tax evasion scheme. Pay your effing taxes. Now, if you don't like the tax regimes in your local economy, then you have a right as a citizen to stand up, talk to your politicians, run for office, whatever you want to do to change that. And things have got to change from a tax policy perspective, because if they change, excuse me, significantly, people wouldn't have this perspective of I've got to hide all this money, which is, I wish they didn't have that perspective. Maybe the world would be a better place, but that's not going to change. So now the nefarious characters who receive money illicitly via activities that are illegal, that's another story, right? That's a fight. And look, the fewer things that were illegal in this world, such as drugs, recreational drugs, for example, the less opportunity there would be for people to get in the business of helping other people hide money. Money laundering for illicit activity is bad. Please stop doing it if you're watching this. But to politicians who are watching this, over-regulation of things that reasonable people should be allowed to do is just as bad. So if you would, deal with both problems, less of this would be happening. But again, it's also a racket, right? Because there's so much money in that world now. I don't know that you could turn it off. And no politician wants to stand up and say, oh, money laundering is a racket. It doesn't really work. And so we should just stop. After in a post 9/11 world, where, by the way, it was proven, that it was just regular bank wires that funded almost all of the flight training that went into 9/11. That's all it was. It was just bank wires, just normal Swift bank wires. That created a whole cottage industry, post US Patriot Act, that has done nothing, to my knowledge, nothing to combat terrorism, money laundering, or anything else that they were trying to combat. I'm against those things, but I'm equally against throwing away tens of billions of dollars unnecessarily to fight those things, especially if it's my money. So that's
I recall reading there's some anecdotal excerpt that the amount of money that only in the US that US banks spend on compliance every year is actually more than the amount of money laundering that they essentially funds that they seize. Which is I would expect that's like 100x more. That you would want to have like an ROI, right? Not like a negative one.
I don't think governments can spell ROI. So that's true. That word is too many letters for them. So look, anybody who is subject to the Bank Secrecy Act in the US or MSB regulation or e-money regulation in your neck of the woods, all has this problem. Everyone gets it. Some politicians get it. Most don't care. It's not their problem. Bank CEOs get it. The problem here's the biggest problem, right, with this whole story. As you get bigger, compliance becomes a competitive advantage. That's insane. So the biggest players in crypto who have been around the longest have a competitive advantage because of the effect you get long term in having had all this pile of stuff that you've had to finance to get where you are. It basically prevents other people in the space. Nobody can compete with Western Union from a compliance perspective. They've been at it for decades. They have hundreds of people. I'm not exaggerating. Hundreds of people working in compliance. No one can compete with that. So, I think that we need to at least eliminate this idea that banking compliance can be a product competitive advantage. I'm not talking about people who provide compliance software. That's a different show. I'm talking about the banks themselves. There should be a level playing field. Everybody does the same thing, but it should be right sized for where you are as a company. If I'm a startup with 0 customers, I represent a different risk than a Wells Fargo with millions of customers. But MSB and banking regulators don't see it that way. And that's crazy. And so that has to change somehow.
I completely agree. Fingers crossed, and I guess all of us can sort of play some minor ambiguous role in this. Let's talk a little bit about. So you mentioned before that that it's such an exciting time to kind of to get into crypto, and that we need more kind of like business minded folks. So where do you see the sort of like the biggest opportunities today in crypto? What are the problems that would need to be solved? So let's say for the audience that is either looking to change jobs, to join some an existing company, or entrepreneurs looking for their next sort of the next thing. What are your kind of where do you see, what is your sort of like lay of the land?
Yeah, sure. So there's so many answers to your question. So so you're basically rebuilding let's just talk about financial services as it relates to crypto, because there's other applications, and I'm not going to talk about blockchain applications in other industries. I'm just talking about financial services, okay? There's consumer And then there's business slash institutional. On the consumer side, you basically need a ton of education. You need easy to use applications. You need integration with existing banking services so that it's easy to move money around. You need crystal clear regulation so that consumers are comfortable with what they're doing and that providers in the traditional finance world are willing to start to offer these products. Right now it's only upstarts that are crypto specific that will touch consumers, right? PayPal just announced what they're going to do, and they're kind of the first major player in traditional financial services. Square is kind of in between the two worlds. They're not a traditional financial service player yet, but they could get there. They're not as big as PayPal, right? So, anyway, so then on the institutional side, you have to rebuild that entire industry into a cottage industry servicing crypto, from custody to securities regulation. No one is really securitized access to crypto, right? Other commodities have been securitized. Gold has been securitized, oil. There's gold ETFs in the US, oil ETFs, and also in other countries. And by the way, those are commodities whose price is manipulated by governments all the time. But the SEC has said we can't have an ETF because the price is manipulated. Well, that's what OPEC does. They manipulate price of oil, right? Government is manipulate the price of gold, right? by buying and selling it. That's what they do. They manipulate the price. So to say we won't make an ETF because the price is manipulated, what they mean is we can't manipulate the price, as opposed to you can't manipulate the price. That's the difference, right? Because in the oil world, it's governments that do it. In the gold world, it's governments that do it. Anyway, so it's a little hypocritical, but it's okay. We'll get there. Somebody who, like a Goldman will want to do it, and it'll get approved eventually. And I don't know, it's all good. But we need more of the traditional world to be integrated into the new world to deal with custody, traditional securities markets, traditional derivatives markets. We've just started to scratch the surface of derivatives markets. DeFi will address some of that, but not at large scale in the early days. So anyway, so all of these products in the old world stack need to be rethought in the new world stack, both on the retail side, which is like what Abra does with our consumer app, but also in our lending desk, in our institutional desk, which is lending out. We do collateralized crypto lending where I don't need to call you if the market moves against the collateral. It just sells itself. That's never happened in lending before. There's never been collateral that sells itself, right? So that completely changes the way lending can work at any kind of scale, or for lots of different products we probably haven't even thought of yet. That's amazing. And so I think there's a lot of people who would work at traditional banking that would have heard that comment about collateral that sells itself and probably didn't even understand, maybe don't even understand what I said, but if they understood the words, they're like, hey, I hadn't thought of that. That changes everything, right? Because if I've got to, if you don't make your mortgage payment and I got to sell your house, that's a hassle. But if you don't pay back your loan and I have your crypto and I can sell it, or it's in a smart contract that sells itself, whoa, so we're in the early days of rebuilding that stack, but the opportunities along the way are incredible.
So would you say that that the kind of in your opinion, the approach to rebuild this stack, should everything be more, should we look at turning each part of the stack into like a protocol, which is like, the DeFi route, or should it be kind of like a hybrid where like, we basically build these like incredibly innovative, crypto native centralized businesses?
Yeah, so I would say, think about two different things, right? First of all, I tend to think about problems being solved by technology and not technology looking for problems. That's kind of the first part. The second part is, and that's part of my, semi-answer to your question about should everything be protocols. I think, well, every problem should be right-sized for the solution. And every solution should be right-sized for the problem. I would say second, when it comes to protocols, there's an inherent advantage in decentralization versus centralization. And that's off switches, it's trust minimization, it's lack of government control, regulatory arbitrage to some degree. Bitcoin got away with a lot.
Because
Ethereum
that
got
one
away
remains
with
to be
a lot.
seen, right?
Well, you're not going to shut Bitcoin off, but if you recreated Bitcoin
Yeah,
today,
for sure.
and people knew that the Genesis block was being created when it was created, is it a security at that time? Maybe. Okay. So, but my point is
Ethereum
that
was a security, right?
right. I think the government would say today that at the time it was sold, it was a security, that it's become sufficiently decentralized. That's right. I totally agree with that. And I recognized that years ago, but I also recognize, hey, I'm not going to be the one to go to the SEC office and say, why aren't you doing this? Because I don't want you to do this, right? So it behooved us at the time for them to take a long time to figure it out. They figured it out now. So the point is that protocols, when they make sense, if they're decentralized, have inherent advantages. The problem with that protocol centric approach in a decentralized model is at some point you have to integrate back into the real world. That's manifesting itself with things like these contract oracles and even new protocols like Link or Comp that basically represent oracles. I liken that basically to saying, Ethereum is like the Matrix, like the movie The Matrix, right? You saw The Matrix, and inside the Matrix, nobody has any knowledge of the real world, right? Except if you manage to gain that knowledge, you could use a hard line to hack your way into the Matrix. Well, those oracles represent the hard line into the Matrix. They have to tell us information such as the price of Bitcoin or the price of DAI, or the amount of ether I need to fix my DAI at any given time in the Matrix. They're a weak link in the chain because they represent a trusted requirement that the Matrix, the ether, in this case, the Matrix itself doesn't have. And so the more we can eliminate those trusted third parties, those oracles, and truly decentralized we can become, the better off we'll be. But we're not digital beings. We're physical beings in the real world. So therefore, we're always going to have these requirements for integrating the digital realm with the physical realm. And there's nothing we can do about it. But I think people are going to be looking for more and more ways to operate purely in the digital realm because of all the advantages, right? Bitcoin has no off switch. Bitcoin doesn't care about the outside world. Bitcoin doesn't care what it's worth on an exchange. Bitcoin has no concept of an exchange. It has no concept of a dollar. It doesn't care about a dollar, right? Same with Ethereum.
And it doesn't care where you're from or where you're based, right?
That's right. But an Ethereum smart contract may actually care about a dollar. That's a problem. That's a challenge. And that requires that hard line to basically get the price of Ethereum versus the dollar in that specific example. And that's an advantage that Bitcoin has, in that it was really not meant to have hard lines. It doesn't have a hard line into the outside world. And so this is the complicated part of the answer to your question is DeFi really isn't DeFi. It's not, meaning my litmus test is very simple. It's not what the regulator says. Is there an off switch, right? If I called you up and say, hey, we got your family here and we're going to kill them all if you don't shut it down, which is the ultimate incentive, I guess. And okay, right. My guess is most DeFi services, they'd figure out how to shut them down. That tells you all you need to know. They're not decentralized, or they're certainly not sufficiently decentralized. You would have a hard time doing that today with Ethereum and with Bitcoin, right? I would say with Bitcoin, it's pretty close to impossible. It lets you spend a lot of money, hundreds of billions maybe. With Ethereum, you'd have to spend tens of billions at least, if not more, to shut it down in order to take over the network, I mean. With other coins, it's probably very little money. And with DeFi projects, it's probably almost nothing. And in a lot of cases, all you have to do is go to Amazon, because they basically say it's decentralized. And then they run on Amazon instances on Amazon Web Services, which means you can shut it down anyway. So we're a long way away from that vision, but we need to make we need to make the D in DeFi more real over time in order for this to work.
Right. And I guess, so a lot of the projects, they do kind of recognize that this is it's a sort of it's a journey, right? And they try to pinpoint which part of the journey they're on at the moment. And of course, there's
not everyone.
Yeah,
I mean, look at Harvest, right?
There's,
Harvest. The Harvest hack is a perfect example, right? Look, heart's in the right place, maybe even mind's in the right place. Clearly, there was some kind of design flaw or implementation flaw in the system that should have been discoverable via a test net, running these contracts, not on a main net for a few months. The problem in DeFi is everybody wants to be first. Everybody's is moving so quickly and doesn't want to be left behind that we're not doing the right kind of testing. We've had, you know, the MakerDAO, we've had, you know, Ethereum Classic, we've had now Harvest, we've had other DeFi projects. We hack after hack after hack after hack. And it's not a problem with Ethereum. It's not a problem with Solidity. It seems to be working fine. The code seems to work exactly as it was implemented. The problem is nobody's testing, or there's not appropriately testing their implementations. So I understand what you're saying, but there are some cases in point that don't reconcile with what you're saying, because what happened with Harvest, for example, this week shouldn't have happened. It shouldn't. So
absolutely, and they were technically audited as well. So, which is like another kind of.
But what does that mean? Part of an audit should be how long was this thing running in a test net, right? What are the mathematics of my audit? Meaning, is my audit provably correct? Most audits can't be provably correct in crypto. In a Turing complete environment, it's very hard. Okay, and by the way, that just points to doing a lot less. One of the reasons that Bitcoin is so secure is that its scripting language really doesn't do anything, right? It basically allows you to sign a transaction and basically deal with unspent outputs to generate new unspent outputs, and that's the beauty of its security, is its effective simplicity. I worry a little bit about some of the stuff coming down the pipe with Bitcoin, you know, Taproot and Schnorr. I mean, the technology, the concepts mathematically are sound, but they add a layer of complexity that's relatively new to Bitcoin. And so, you know, I think it's going to work out fine. But if there were any risks to highlight, that's probably it, right? It works because it's simple. Right? Ethereum ends up with these challenges because it's supposed to be able to do everything. And people aren't necessarily good at doing everything. It might be better if we had dedicated blockchains, right, for specific applications. But you know, that's hard. That's very hard. So, you know, we're in for a lot of this over the next couple of years, a lot more of this, because people are going to keep doing this because they see dollar signs, and so they're motivated to move quickly. We need to realign these incentives. Well, if this is going to change, we either need to realign these incentives, or we simply need to accept that a lot of people are going to lose money by being first in some of these applications. And you don't know who's going to lose money and who's not going to until you've done it.
And I guess I can't remember who said that. But, oh yeah, it was just today. Jesse Powell from Kraken said that you know the true way to becoming woke is by actually accepting your losses. In this case, that like you know you're not going to learn if you like.
Not that they have a choice.
He put like a slightly aggressive tweet around, like, you know, like, guys, stop asking exchanges to bail out from your like kind of like essentially like, you know, in like, you know, lack of security.
There is no exchange.
You need to truly understand what you've done. You have to take this loss. You got to bite the bullet.
I mean, in the DeFi world, there's no exchange. I mean, again, there is. I mean, you can go to Uniswap, and again, unless you're a government with a gun to somebody's head, you know, in theory, there's nobody to go to with Uniswap. That's why people want Uniswap. But they can't have it both ways. It doesn't work that way, right? And he's right. He's 100% right. And you know, while there's quick money to be made, this is going to keep happening. I promise you. And I don't know.
Well,
yeah.
Hopefully, over time, we kind of we figure it out and we get over it. Anyways, I know, Bill, you're super busy. This has been an incredibly exciting and motivating conversation. And thank you again so much for your time. And I wish you all the best for with Abra going forward.
Oh, thank you. I appreciate that. And thanks for having me. I hope you all got something out of it. And you know, go to abra.com and check us out, or you can follow me on Twitter, Bill Barhydt on Twitter.